Welcome back to another episode of the Startup Operators Weekly Roundup. The Weekly Roundup is a show where Roshan and I discuss the biggest developments from the Indian startup ecosystem and try to break that down for you. Now, we are halfway into May and we have seen a lot of slowdown in activities from the ecosystem. But having said that, EV has still been running in full steam with Ather raising $128 million round. Along with that, e-commerce platform GoKwik, who we also featured in our podcast interviews, raised $35 million in Series B fundraise. Razorpay announced a $75 million ESOP buyback, and Swiggy has been on an acquiring spree by acquiring Dineout. Roshan, great having you to join us today. One thing which I really miss talking about in the roundups is like, hey, this large size checks which we saw last year. And right now, given the global macroeconomic conditions, we are witnessing a huge slowdown in the money that's being pumped into the ecosystem.
Yeah. No, for sure. I think growth stage deals will slow down for sure. I mean, that is the first to take a hit always. But I think early stage deals will continue. I'd like to remind people often enough that the total venture capital that we got in 2021 was around $40+ billion. In that same time, I mean, over $600 billion of venture capital flowed, right? So it is, 7-8%, right? And if you consider VC money itself in the broad scheme of things, I mean, it's significant, but it's not that large anyway. So macro stuff will definitely affect venture capital, but how much will it affect venture capital in India versus early stage? I mean, all of those calculations, if you do, there will be some trickle down, but it won't be like a kind of doomsday that people are painting right now, which is that you will have to reposition yourself, redo all of the things and rethink and all of that, right? Which I think is a bit of an overreaction, if you ask me. And see, this is something that we expected for long, right? I mean, everyone knew that at some point of time the Fed was going to hike rates. Someplace I was reading 40% of all of the USD, right, US dollar was printed in the last 2 years, which is just absurd. And so, I mean, when you think about inflation, right, what else will you have but that kind of inflation at this point of time? So, yeah, I would say, focus on your customers, focus on your business, be even keeled about those things. But I would still say no need to panic, right? Need for caution for sure. Yeah.
Yeah, and are you following caution with what your portfolio is looking like today across cryptos and stocks?
Yeah, well, I mean, you asked me about my portfolio. It's fairly diversified, right? 20% is out the window, 15% is down the drain, and 65% is gone with the wind. We totally did not rehearse that joke, but see, you have to just stay invested for the longer run, right? I mean, again, this is not financial advice, but I am not one of those who checks my portfolio every day, 2 days, 3 days, or whatever, because I am taking only high conviction bets, right? So I'm investing in businesses and I'm not investing in price or numbers so much, right? I mean, of course, there's this whole value investing theory. You have to buy low and all of that stuff. And, I am not certainly so well versed to figure out at what price point I have to buy something or whatever. I just look at some trends in terms of, okay, will this business make more money in the future or not, right? And I am not one of those. And I think that is the approach for most passive investors as well, right? I mean, we're not traders with like 2 screens here, 3 screens somewhere else, and like fretting about all of the minute movements that happen 40 times a day, right? So yeah, but hey, some good news on that front. I finally got my allocation. I got an LIC allocation. So hey, after cribbing about the allocation for, I think, 40 roundups, I finally got an allocation. Not the best timing. I would have really loved to get a Nika allocation, but I'll take this one. It's okay.
Yeah, I mean, and let's see. I mean, I think what the cutoff price was at 945 and the allotment happened at 904 rupees. So let's see. Still fingers crossed for some good action here.
I mean, again, so LIC again is like, I don't know, 50-60% of the market, right? I mean, it's not going to go away tomorrow. I mean, it's going to be very, very significant, right? I'm just looking at it from the long run. I do feel bad for, some of the folks who invested in, crypto coins and so on, right? I mean, it's
especially in like Terra Luna.
Yeah, I mean, it's been a heck of a week, I mean, I know people who have lost a lot of money on that. And I always look at crypto coins and projects and all of these as investing in the technology. I mean, I've always said that the price action is not something that you should really worry about. Just look at the technology, look at the underlying technology. Like, so I am still optimistic about Solana. I'm still optimistic about Matic, Ethereum, all of those, right? Because there are real world applications to those technologies. And I think this is a phase, markets go up and markets go down. We're in a phase where markets are pretty Roger right now. So let's wait it through.
No, I also, I know we're extending this a bit, but there has this learning curve, right? Crypto is like hardly a decade old, whereas all these the money markets have been there for like almost
No,
a
and
century.
see, the thing is that there are basics of economics that you cannot ignore, right? There is something called a demand and supply. And
Yeah.
if there's, if you have the Fed printing money like that, I mean, people are going to spend that money on ridiculous things, right? So you saw people spending on crazy things like Dogecoin and whatnot, right? I mean, what were people expecting? And I think the crypto community also needs to temper its communication, right? People were suggesting crypto as solution to everything, right? I mean, that whole trope of Web3 will solve this, right? A lot of people said that it's a hedge against inflation and it's a hedge against the markets, hedge against everything. Well, I mean, you're seeing what's happening right now. So I think we need to be a little more tempered in our expectations and look at it for the technology innovation as such and not worry too much about the price action, I feel. Yeah.
Yeah. While the economics are slowing down, something which has been really picking up steam in India is the entire EV space, right? We've spoken a lot about it. But Ather Energy last week they announced a fundraise of $128 million in Series E round, where for the first time the National Investment and Infrastructure Fund Limited invested in a modern manufacturing company, and along with NIIFL Strategic Opportunities Fund (SOF) and Hero Motocorp also invested. Now, of course, the plan to use these funds is to expand its production, is to expand the technology and manufacturing centers. What I want to understand is like, yeah, while there's a lot of hype around the whole EV adoption in India, but there are a lot of barriers to overcome. For example, we have to revisit the entire battery design pack. And now, while we are talking about expanding production of EV vehicles, but a lot of infrastructure development also needs to happen. So, where do you think we
Yeah.
are in terms of that?
No, see, there are a lot of challenges, right? But one thing I will say is EVs at this point of time is not a distribution play. Automobile industry is fairly mature, right? Has been around for centuries, and OEMs typically assemble variety of things, put it together, brand, and then distribute it. That's the play basically in the automobile industry, right? But EV, you cannot do that, right? Because EV is a very, very new sector, and a lot of things have to be vertically integrated, right? Which means that your innovation has to be full stack, bike to batteries to charging to everything, right? So yeah, I mean, while the likes of Ola, Okinawa, plenty of others, they've kind of sullied the pond, I would say, right? Because EV adoption, again, any new technology, I mean, people are always skeptical. But I will say that the early adopters will not care too much about this, right? And Ather is actually looking at the early adopters. They're not looking at the likes of people who buy an Activa
Right.
or a Jupiter, right? They're not looking at those kind of guys. They're looking at the geeks. They're looking at early adopters who want a new gadget, who want to experience that new innovation, right? So for that, I don't know. I mean, it will affect too much or not, right? Because I think those people will go ahead and invest anyway. It's good to see the government body that is invested, right? I mean, government funding EV. I think it's a very strategic thing. But China did plenty of this as well, right? I mean, they had their own, like for example, Evergrande was an EV. With the real estate company also had an EV arm and so on. They had plenty of these like Chinese EV companies as well. However, I mean, it kind of faded off, I would say. In India, I think, I have stuck my neck out and said that, by the end of 2030, I think we will have more EV vehicles than not. Even with all of this stuff around, like, vehicles catching fire, I will still say that will happen, especially for certain segments, right? I mean, let's say passenger vehicles, maybe like, cabs and commute vehicles.
Delivery.
Exactly, delivery vehicles, even the two wheelers as well in certain segments will become majority EV, I would say, right? So it's definitely a market worth investing in, I mean, because it's energy efficient as well. So India can definitely leapfrog in this axis. I mean, it's something we've spoken about plenty as well, and we can get ahead on our climate goals also, right? So
Right.
so it's definitely something that the government should subsidize, should invest, should promote for sure. Ather is a fantastic story, man. I mean, like, I am really, really happy about Ather's success that they're seeing right now because, these guys have been plugging away for a good 10 years or so, right? I mean, other EV companies that you're seeing are, they've happened, in the last 3 or 4 years. 2013, 2014 was a time when, the consumer internet boom was happening in India. And these guys could have very well built another .com or another app as such, right? But yeah, I mean, think about it, right? For 10 years, they've been plugging away at the problem. And it's not a trivial problem. It's a very, very difficult problem. So I'm really happy about, the success that they're seeing. The Ather bike itself, I think, they're scaling their distribution at this point of time, setting up more charging points and so on and so forth. I think they're in about 30 different cities at this point. Right. So I think plenty of this money will go into distribution, right? Because ultimately, consumer goods require distribution. And hats off to Tarun and Swapnil, I mean, fantastic guys. I think IIT Delhi folks. He probably worked in McKinsey for a bit, I think, Tarun, and then started this up right in college itself, right on campus. Very, very excited. And my friend Rajiv Mantri, his fund has invested in this round as well. Navam Capital. Definitely check out Navam Capital. Folks are doing some amazing work. A lot of pioneering investments, right? Whether it's EV or whether it's clean tech and so on. They've spotted these sectoral trends and they spotted some of these startups way before it became mainstream. So yeah.
Yeah, and also Ather had launched this 450x variant, right? I think that has been seeing a growth of 25% month on month, right? That just speaks to like how much people are willing to adopt EVs.
No,
right?
there's a rising demand for sure, right? I mean, these folks also, I think, partnered with Foxconn as well, right?
Yeah.
Pretty recently. So yeah, I mean, there's definitely a lot of demand for sure.
All right, so some news from a person who already had interviewed in our podcast. GoKwik has raised a $35 million Series B round, which was led by Think Investments and RTP Global. Now, in between their previous and this current fundraise, I think the company has crossed a GMV, which is gross merchandise value, of over $1 billion for its merchants. Now, that's a testament to the work that they're doing.
Absolutely.
Right, and especially with, we have been seeing the boom of D2C e-commerce in India, right? We have had a lot of folks in the podcast who spoke about this. But GoKwik is trying to solve for a very unique problem, which is RTO, that is return to origin. Can you elaborate a bit on that?
It's a fantastic business, It's a classic building shovels in a gold rush kind of a business. We've spoken about the likes of delivery, for example, right? Commerce IQ and so on and so forth. Now, these guys are operating in this whole e-commerce. And what's amazing is that e-commerce has become big enough as a category for people to start building for e-commerce, building software solutions for e-commerce. Fantastic company. Pretty amazing entrepreneur as well. I mean, he's built multiple businesses before. And GoKwik solves for return to origin, right? Now, which is a huge problem for e-commerce and D2C folks, because imagine, I mean, this return, right? I mean, it's just such an overhead. And considering that you have delivery networks throughout India and so on, right? I mean, you're serving people from Kashmir to Kanyakumari. How do you prevent RTO problems, right? Which is people either not satisfied with the product or they give a wrong address and so on. Now, these guys have built a very intelligent sort of an algorithm to catch these things, right, and prevent RTOs. As Chirag said, essentially what they try to do is increase conversions. They have a bunch of things off the box that can help merchants with that. And I feel this is one of those solutions that really helps entrepreneurs, and India definitely needs more entrepreneurs, and anything to sort of support these folks is always welcome. And I really like the fact that, we have these solutions, we have this plug and play infrastructure for people to get started on businesses over a weekend. So very, very relevant business and also a very good business, I would say.
Right.
Yeah,
and also we'll link Chirag's conversation with you at the description. So please do check that out.
Yeah, it's a great primer if you want to understand this whole e-commerce category itself, right? I mean, serving e-commerce as such. So yeah, I mean, definitely check out that episode.
So moving on to our next bit of news, Razer Pay last week has announced its fourth and the largest ESOP buyback program, which is worth $75 million. And with this, 650 existing and former employees will be eligible for it. And Lightspeed Venture Partners and more strategic ventures will be secondary finances for this round. Razorpay's valuation has soared from $400 million to $7.5 billion during the last 2.5 years.
Wow.
Right?
Razorpay is a phenomenal business. And see, ESOP buybacks do two things, right? One is that it reinforces the founder's commitment to the business, right? I mean, they're serious about long-term vision and so on, right? And second is it spreads the wealth around, right? I mean, because ESOPs are not some fictional, mythical thing, right? I mean, ESOPs are real money in that case and not just paper money. So yeah, I mean, it's fantastic. 75 million is significant, I mean, it's very, very significant. Yeah. I've told, people enough times, right, that few tens of lakhs could actually be life-changing for people. I mean, it can save off years in terms of like savings and so on, right? Which is fantastic. I mean, if you're a young person, if you're in your 20s and you get that kind of cash, right, it frees you up to take some more risks in life, right? I mean, maybe you want to start a business, maybe you want to do something else. It's amazing, actually.
Yeah, it's a massive wealth generation channel, right? Especially if you look at people who join like early stage startups and grow, and these are folks who are straight out of college in their mid-20s. For them, it really sets them up. Yeah?
No, for sure. See, I mean, all of us go above and beyond what's required at a startup, right? I mean, there are no work hours or there are no all of these perks and so on and so forth, right? I mean, of course, things are changing right now. But at least, I mean, when I started out, let's 2008, there weren't a lot of these things, right? You took like 30% less than market salary and you worked pretty much all the time, did whatever was necessary. I mean, things are of course changing, and things are way better right now. I mean, people, startups pay at par, or if not, way better salaries today. Working conditions are way better. I mean, there's a certain semblance of a work-life balance also, I would say. But yeah, I mean, this is fantastic.
So in 2021, we saw so many companies announcing ESOP buyback programs. So I really won't be surprised if you're touching the $500 million mark
Yeah.
right now.
No, we are. I mean, the number that I saw was around 450 million, which is like 3,000 crores. And even if you take away like capital gains and all of that stuff, right? I mean, it's a massive amount of money that's gone in the pockets of people, right? So, and look at the second order innovation, second order effects that'll happen as well, right? A lot of people might start up, right? Yeah.
Yeah, so I mean, right now we'll very soon see the third generation of startups coming out of India.
Yeah. No, for sure. I mean, if you think of the Naukri and the Bharat Matrimony, those types as the startup 1.0, and then Flipkart and so on as the startup 2.0. I mean, we are seeing startup 3.0 right now. And yeah, I mean, I would in fact go back even further, right? I mean, look at the kind of wealth that Infosys created for its employees. A lot of funding, innovation, startups has come out of that. So yeah, it's definitely non-trivial, and it's definitely a great thing for the ecosystem, I would say.
So in other news, Swiggy has announced that it will be acquiring restaurant tech platform Dineout from Times Internet for an undisclosed amount. And even after this acquisition, Dineout will be operating as a separate entity. But Swiggy will be able to capitalize on the tech which Dineout has built in terms of like booking tables in restaurants or getting offers, and also capitalize on the data which Dineout actually captures in terms of who prefers like what sort of cuisines, what's the usual table size that's required for a set of people. Right? Do you think Swiggy is trying to become more like Zomato and Zomato is becoming more like Swiggy?
No, I think it's definitely complementary for Swiggy, right? I mean, Swiggy is basically an order in market, whereas Dineout is a going out kind of a market. And now, with no COVID restrictions as such, and with some sense of normalcy coming back, I think the Dineout business will be more relevant at this point of time. Also, one side note, you're going to see a lot of acquisitions happen, over the next year, 2 years maybe, right? Because typically downturns are when a lot of startups get acquired. As big as, for example, say LinkedIn, right? LinkedIn got acquired by Microsoft for, I think, what is it, 25, $26 billion sometime back, right? So yeah, I mean, we're going to see a lot more of these acquisitions. Yeah, makes perfect sense for Swiggy, I should say.
But one thing I this is discussed in the roundup only, Swiggy had acquired Super Daily for its instant groceries and essential delivery services. So yeah, the Super Daily operations have been suspended in Delhi, NCR, Mumbai, and Hyderabad. And with that, some other headlines from the week include Skillmatics, which is an edtech startup. They raised $16 million in a Series B round from Sequoia Capital and Jalaj Dani Family Office. iNurture Education Solutions raised $15 million in a combination of debt and equity from ADM Capital. Apna Club, which is an FMCG wholesale platform, raised $10 million in Series A from Tiger Global, whereas EV startup Moving raised $5 million in a seed round from Beyond Tech, Strides One, TradeCred, N Plus One Capital, and others. HR Tech Hono raised $5 million in Series A funding round, which was led by Akash Chaudhary, who is the managing director for the Akash and Byju's combined entity.
Yeah, those are pretty interesting fundraisers. I mean, interesting to see family offices invest in startups, and very, very interesting. And again, pretty secular, right? I mean, EdTech and HR and whatnot. So yeah, pretty interesting.
Yeah. So there was this interesting thread put out on Twitter by Avnish Bajaj of Matrix India Capital. He writes 2017 to 2022, which is the post Sequoia Vision Fund 1, and 2020 to 2022 were the abnormal period and not the current period. Steady state multiples should be more looked at from 2010 to 2017 than last 5 years, which signifies that we need to go back to first principles. We'll link the entire thread in the description below for you to check out. But Roshan would love to get your thoughts
Yeah.
on this.
No, very timely thread. And Avnish knows a thing or two about downturns, right? I mean, he was formerly the founder and CEO of Bazi.com, and they saw the whole dot-com bust and all of that stuff, right? So yeah, definitely an old hand, experienced investor. One of the first, in fact, the first investor in Ola, I would say, right? And I think they're also invested in, what's that, Razorpay as well,
Yeah.
right? So yeah, I mean, some very valid insights on conserving cash, for example, right? Being mindful about your business, customers, and so on. Definitely a good thread. The valuations are an important point, right? I mean, look, 2021 was such an abnormal year. Some of these public SaaS companies in the US, for example, right, were trading at 61x, 45x, and those kind of multiples, which is just absolutely absurd. Datadog, Cloudflare, those kind of guys. And obviously, I mean, you're going to see those valuations temper down, right? I mean, it can't be. I mean, Zoom was at some 85x or something like that.
No, they're just like way inflated.
Yeah, really inflated, right? I mean, so obviously those prices were not sustainable. They had to come down. And yeah, I mean, what Avnish has said is that it will probably come down to 5 or 8x, which I feel is on the lower side, I would say. Probably like 10, 12x is something that you will still see happen, I think, especially on the SaaS front, right? But hey, Didi, what's up? Guys, say hi to our guest, Didi. Anyway, so the public markets will definitely correct for sure. They've corrected already. Jason Lemkin also had a few tweets out on this whole valuation thing. In fact, he had a very good blog out as well. The other thing that happens during these downturns is people write amazing blogs, right? I mean, I'm like wondering, why don't you guys write this sometime else? There was David Sack, Jason Lemkin, Closer Home. I think Aviral had a good blog. A junior VC also had a very good blog on this. So yeah, I mean, there's a lot of good sound advice, I would say. Again, if I were to sort of play devil's advocate, these downturns are also like used by investors to negotiate on valuation, right? I mean, that's just how it is. Nassim Taleb always says, right? I mean, don't ask a barber if you need a haircut, because you already know the answer.
Let's talk about some of the conversations you have lined up for this week. You'll be talking to Amit of First Principles. So what are you excited about?
So it's First Principles is a venture studio, and they focus specifically on SaaS businesses, right? I'm very curious to understand, how they use their experience of advising different SaaS businesses and how they extrapolate general benchmarks and general operating processes and methodologies to make it useful for these venture portfolio startups that they have, right? So yeah, I'm still pending that conversation. I mean, we'll be talking to him hopefully shortly. We're also going to put out a special episode which is going to capture this whole idea to product to company journey. That's one of my favorite questions to ask entrepreneurs. I've asked entrepreneurs from various fields, whether it's fintech or e-commerce or healthcare or wherever. How do you, first go from idea to building a product to then, building a company? Because I think that's a very integral process, and we're going to put out like a mashup of all of the best answers that we've had to that question. So do check that out as well. Also, I mean, if you guys have suggestions for guests and content, I mean, feel free to let us know on our social media or even write to us with a startupoperator@gmail.com. So yeah, that should be interesting.
Yep. So yeah, that's all folks for this week's roundup. As Roshan mentioned, you can tweet to us at Operator Startup on Twitter. On LinkedIn, we are the Startup Operator. And of course, our email ID is the startupoperator@gmail.com. Along with that, if you like these updates to be delivered straight into your WhatsApp inbox, you'll find a link in the description below. Do subscribe to that. And yeah, let us know how we did by either liking the video, subscribing to the channel, and dropping a comment. That really helps us, improve our distribution and helps us with discoverability. With that, we'll see you again next week. Have a great week ahead.
Have a great week, guys.